Our content is intended to be used and must be used for informational purposes only. It is very important to do your own research analysis before making any investment based on your personal circumstances. You should take independent financial advice from a professional in connection with or independently research and verify any information that you find on our website or podcast and wish to rely upon, whether for the purpose of making an investment decision or otherwise. What's up, my future one percenters? This is Marathon Money, brought to you by Wincrease.com. I'm Cam Jones, the prince of the stock market, and I'm here with my boy, Kenny Coins. What up, man?
Yo, what up, man? How's everything going?
It's going good, man. These are days where you figure out if you're a good trader or not, man. These are days right here.
You know, last few little moments. You know what I mean? These are the moments where everything comes to an end, and you gotta accept your wins and losses.
Wins and losses, but then you have to figure out: are you good enough to play the market when it's going down, when it's in this volatile session like this? Because I feel like anybody can do it going up, you know what I'm saying? Because we've enjoyed that ride up for the past 2 years, you know what I'm saying? But now is the time where you figure out, like, yo, how disciplined are you? You know what I'm saying?
Of course, man. Like you said, the ride for 2 years, eventually it gotta come down, man. You know what I mean? Stock market was like Shikra for a while.
Yeah.
You go up, go up, go up, go up. I mean, then you get to the top. Time for that slump down. You know what I mean?
But you said something last week, man, that was pretty slick. And we were talking about God dang, how did I just forget that? I just forgot what I was about to say. But you said, I don't know what you said, but you said something.
You'll remember halfway through.
You did. You said something, man. I can't remember. This is what it was. We were talking about support and resistance, and I said that we were at that resistance on the NDX, SPX, and the Dow. And I said, the past 2 times it's done this, it popped back up. But at the beginning of the week, that's what it did. But then you were like, man, but this is about to be the 3rd time. This thing probably going to go down, man. It's 3 times. I don't think it can hold right here. And at the end of this week, what happened? Everywhere closed down below resistance.
Dude, everything.
Below support. I'm sorry.
Dude, like Friday, Dow was 500-point loss. S&P 50. You don't understand, 50-point loss on the S&P, you don't realize how big that is.
Right.
That's huge. 50-point loss, because your S&P is 2,500. You guys got to remember that. It's $2,600, 5 cents off. You know what I mean? So, but that's huge type loss. 50 points, 159 points on the NASDAQ. That's big loss. Small caps, the Russell 2000, 24 points. Like, these are huge, man. They're huge losses, and it's all across the board. You know what I mean? Toronto, London, Paris.
It's really worldwide, honestly.
It's worldwide. You know what I mean? The only thing that's really going up is the VIX, and that's not usually a good sign when that thing's going up, to be honest with you. Like I said, last week, you know what I mean, something touched 3 times and ain't going up, man. I think it wants to go down, and it's gonna go down. You know what I mean? You only can shoot out a window before it breaks. How many times can you shoot out a window before it breaks, you know? But it's like across the board, everything's going down. And this is where it comes down to: how good of a trader are you, or how good of an investor are you?
Yeah, can you make that change?
Make that change! I gotta make that change today!
Man, gotta put that Michael Jackson on him.
Can you make that change?
Can you,
Can you
man?
make
But
that change?
this is the worst December start since 1980. People don't understand how long ago that was.
I wasn't even born yet, man.
I ain't see to exist yet.
I was close to being born, but I wasn't born yet.
But 1980, that was the last time December had a bad start. Either that's a good sign or a bad sign, or it depends on how you want to take it. Honestly, to tell you the truth, the 80s were pretty good years in the stock market. After 1981, everybody made a lot of money. So, honestly, to tell you the truth, it's depending on how things go. It could be a really good one. It could be a really great one. I just think personally we've been going up too much, too fast. So because the next market crisis didn't happen until 1998, 1990 year, because the market kept going up for a while between 1981 and 1990. So, then again, that one thing Astro keeps saying could still happen. That 17-year bull market, that could still be possible.
Because honestly, we talking like this right now, right? But if you look at the past 2 years since we actually had a podcast, I mean, everything has been up. We still, if you've been in since those days, since we first started, you still good. Nobody likes to lose money, just period. But I mean, you still pretty good. You know what I'm saying? We still up. It's just that if we just talking about right now in the present, the past few months, things look pretty bad. You know what I'm saying?
Of course, you know what I mean? And the thing about it, 1980, October and November was bad. So, to tell you the truth, I personally think we could definitely rebound off of this. That's something I know that could be possible. So it depends on how you see it, how your trading vision is.
Yo, so just want to let everyone know before we forget that this is the last marathon money of 2018. We off, man. We took the rest of the time vacation days, man. We off for the next, I think it's 2 weeks. We'll be back first week of January, and we're gonna bring you those stock picks. So today, what we want to do is go over the stock picks that we had picked last January. But I have to say, before we start this, that it's been pretty bad. You know what I'm saying? We're looking at it, but this is what I want to propose to you, Kenny. Tell me if you think this is a good idea. Instead of us doing it once a year, I think it's better if we did it every quarter. So like every basically we could do it like every earnings season, because some of these, they were up pretty good during the year. You know what I'm saying? Then obviously since October everything has came down. But I think that we probably need, especially with things being as volatile as it is right now, we probably need to reevaluate these things every quarter.
Of course.
What you
think? I'm with you on that. I think unless you want to bring more of that trading style, I'm with it. I think 3-4 months is a pretty good amount of time to keep a stock, because sometimes, man, we make 200-300% in that time frame.
Right, exactly.
You know what I mean?
Just think about Square. Think about Square. Yeah, in October or September, Square was like $102.
Yeah, that's true. That's 100% true. And I think sometimes we, you know what I mean? But the way me and Cam trade is that we've been in a lot of these stocks since, $15, $20 range. So sometimes we don't see the, let's put it this way, like more like those little $20, $30 drops, because we've been in the money for so long.
Yeah, like I mean,
You know what I
obviously we
mean?
see him, but it's not
Well,
that big of
obviously
a
we see
deal to
it's
us.
not that big of a deal. You know what I mean? Like somebody who just got in at 70 and then he gets 102, then it drops back down to 70.
Yeah,
You
yeah,
know, to him he sees that. With somebody who's been in at $12,
yeah. I mean, we
it goes from
care, but it's like
yeah,
when you hear us talk about it, we like, hey man, this stuff happens, stuff like that. But
yeah,
we're not taking into account people that have bought late in the game.
yeah. So so I think that's a great idea. I think that's phenomenal. Move away from the stocks that are not helping us.
Exactly.
Um, because definitely a stock only gains 3 or 4%. You might as well take those 3 4%
Yep.
and add it to your win columns.
Yep.
So
Make that
I think
change,
that's
man. We gotta make that change.
Make that change. I gotta make that change today.
man, you can't go wrong with Michael Jackson. That's for sure. You can't go wrong with
Yeah,
that man.
let's start it up, man. Getting of the stocks that we picked up or that we said we're gonna be good this year. First that was on the list was water, WTR. Um, Now let me get that up. What's our year to date here? It's not gonna be good. It's negative 8 point, basically negative 8.8% on the year. So that was terrible, terrible. But and waters, that's not real. That really wasn't one that was up all year. It was up slightly, but it was more on the downside all year. So
Man, after March, it just started creeping down. That's where we should have just popped it off of our list, took that percentage. You know
yep.
what I mean?
But let's move on. We got another dud. This is oh my goodness. Oh my goodness. This is a bad dud, dog.
It's going down.
It's bad. This is bad. Overstock
yeah.
down 73% on the year. Mm.
I don't know what went wrong with them.
Yeah, man, they was in the whole crypto thing, man.
Oh, that's right.
They was
That's
in the whole
right, man.
crypto
They
thing.
made so much money off of Bitcoin. I was. They didn't pull out.
Well, the stock went up off of that crypto news. You know what I'm
Let me tell
saying?
you
It
something.
popped up, but
If
then
you didn't,
when crypto started failing, obviously it took everything else with it.
man, I pulled out. I ain't trying to get nobody pregnant. I pulled out. I know, damn sure I pulled out. That 1 year Bitcoin, that was it. That was it. You didn't take your money, that was your fault.
Okay, let's move on, man. Let's move on. Man, you got me dying with that one.
I'm telling you, you didn't take your money, that is completely your fault. Let me say, like Bitcoin, I didn't say it was a bad investment. I think people overdid it. That's what happened. And I think Bitcoin and all those stuff are probably gonna go up, just like the internet thing. You know what I mean? Just like what happened with the internet .com boom. I know that's gonna happen. You know what I mean? I just think just like the .com, I
It's
think people overdid it.
yeah, it's too many coins, man. They need to.
It,
They
it,
need to
it, it was
get.
the same thing with the dollars. Too many stocks, too many people doing the same thing, and then eventually it bust, and people were mortgages, refinancing houses, pulling out loans, and then taking. Then after that, realize Bitcoin is not going to sustain all that if everybody keeps removing their money.
Yep. So, moving on, Disney. We picked Disney. That's up 4.3% on the year. So I mean, we got a winner. You know what I'm saying in there.
Disney has some struggles because I feel like you know with the whole Netflix thing and
Well,
ESPN.
Disney is another one that was up uh, to I think about 120 a couple times during the year. It could have benefited from us doing the 3-month thing. You know what I'm saying?
Yeah.
Reevaluating every 3 months. But man, hey, we know for next time. The next one on our list was Twitter. Twitter up 49.4% on the year. So that's a nice winner right there. That's a good winner.
Last 3 years, man, last 2.5 years, Twitter has been grateful to us.
Yeah.
Grateful. You know what I mean? If you were in that $11, $12 like we have, you have made quite a bit and you have came a long way. Perfect.
Yeah, you know. Oh man, here goes another one. Oh my goodness. Oh man. There go another one, dog. GE.
Ooh, I don't even want to talk about that, man. Ooh.
Down
I feel like they'd just be making bad decisions after bad decisions.
down 59% on the year, man. Now that was one that was never really up. That wouldn't have benefited. I mean, I guess it would have benefited quarterly by just saying, "Hey,
Taking,
this is
yeah.
cut your losses." You know what I'm saying? Man, terrible, terrible, man. Let's move on to another one that is it didn't do well, but I don't know. The ETF MJ. So when we it's weird. I can't pull up the year to date percentage here because it changed. The ETF changed from MJX to MJ, but I do know that when we first said something about it, it was about $30 a share. Now it's at 27.23, so down maybe like a percent, something like that. Still not
that
good.
one.
We don't want to lose.
Yeah.
Let's move on to Square, our boys Square. So year to date, 79%. We up 79%. Now we told you, man. This thing was at $101, $102 in like September.
Remember when we first got it for the beginning of the year, it was at $34. Maybe less than that.
So hey, you know, they did pretty good. And this is what kind of like what we're talking about. That's a big drop from like that 102 down here to where it's at right now, $62. But I mean, we still up 79% on the year. So we got some room to play there, and I really don't think they're going down. Well, I can't say that. I mean, anything can happen in this market right now. We just got to make sure that now it's about buying insurance. Now it's about buying those put options. You know what I'm saying?
Yep.
To make sure that if something keeps going down, that at least we can make some money while we hold the security. But they had a good year despite what's been going on the past couple months with them. It still had a great year, 79% in 1 year. That's great. That wipes out the overstock.com, right?
Yeah, definitely.
Wipe that out. So we even there. Oh man, the next one. It's not that bad, but it's bad. Next one, Zillow. Our boys, Zillow, down 21% on the year. Zillow, I don't know what's up with you, man. Y'all were my boys balling up there at 60. That's another one that would have helped. It would have helped out if we would have just done the 3 month.
I think Zillow is starting to make bad decisions.
I agree with you, but I'm still behind them though.
I'm still
behind the future
them.
of real estate.
It is. I think they're making bad decisions as a company. Here's why. They're going into areas they know nothing about. They're doing GE type stuff.
Oh man, don't say that.
They are, man. Let's put facts, man. I learned from GE. You know what I mean? You know what I mean? You gotta learn from your losses, man. I learned from them. GE, why is GE the way where it's at? It entered the market that it thought it could just come in and buy market share. It don't work like that.
Mm-hmm.
You know what I mean? And they're entering into a market. You know what I mean? You guys are promoting real estate, not buying real estate. That ain't
Yeah,
y'all.
yeah.
That ain't y'all. That's a two old different industry. Promoting real estate and buying real estate is two different things. You know what I mean? And I think Zillow entering that market ain't doing it because they need to monetize about getting themselves into finding a way to get individual people to start running their own little ads on Zillow to promote their house.
Yeah, right.
You know what I mean? I think that's a phenomenal idea because even if the margins are small, say just $100, let's say $100 for 2 months or something, you know what I mean? But it'll get people to say, man, I'll just invest $100 to get 200K
I like
instead
now.
of spend
That's a good idea, man.
and
Go to
instead of
route or like
spending.
go to route
Yeah,
like Facebook ads where you could target,
yeah.
whoever in the neighborhood, something like that. Man,
Let Zillow come in
that's
there and do that, and then that allows you fix an algorithm that allows you to sell your house. See, your house got 4 bedrooms, 3 bathrooms. You know what I mean? People who are interested in looking at that, their ads will pop up. You know, instead of giving some real estate 2,500, 30 grand, you spend about 200 grand promoting your house. That's done with. You know what I mean? Who just saved 2,300? You know what I mean? I think people will see it like that because when you go get a real estate and you realize you got to cough up 3 grand, that 200 is gonna look sweet like pie.
Make that change. I make that
Exactly.
change
Yeah,
today. Woo!
hey,
boy,
cut the check, Zillow. Cut the
cut
check,
the
man.
check,
Cut the check. Send it to Marathon Money.
money. You know what I mean? Add 6 zeros to it too before you send it over.
Perfect.
Mm.
Oh,
Um,
okay, man. Moving on. We got another bad one, man. Alibaba down 13.5% on the year. Um, I mean, I'm saying the same thing over and over. Most of these would have benefited from the 3 month thing. Alibaba was up as high as $211 in June. Everything just kind of went haywire. But that's the market, man. But I think this stuff would benefit if we.
a lot of things. Here's the thing, man. There's a lot of when you make a stock pick and you make it based off the chart, but there's a lot of things that happen throughout the
Right, the
course of
chart
the year.
changes. Chart changes.
Chart changes in the course of the year that becomes unpredictable, man. Those tariffs, we didn't know. You know what I mean? Alibaba's not gonna be able to survive with those tariffs right now. You know what I
Well,
mean?
I think that they can survive, but I think that this is a
No,
rough
not in the
patch.
U.S. market though. That's what I'm trying to
Oh,
say.
okay, I got you.
You get what I'm saying? They're not gonna be able to be as profitable. You know what I mean? To me, it's crazy how in the hour they made 5 billion. Their stock is still going down.
I thought it was 10.
10 billion. I don't know
I
what it
forgot. It
is.
was a lot of money that they made in 1 hour.
That's all. I mean, a lot of money they made in 1 hour. That's it. That's all I know. But all I'm saying is it's crazy how the stock doesn't move, and that should tell y'all like news do affect the stock market, but it seems like negative news does more damage than positive.
Way more damage. Way more.
You know
damage.
what I mean? So that should
Oh,
automatically
they
tell
coming through.
y'all.
Negative news come through like Hurricane Irma, man.
Yeah, what? So I'm telling y'all. So that stuff right there should automatically register to your head that you know what I mean. Even though you pick a stock, Alibaba's a great company. It's just the environment that is in that why it can't thrive. Once the environment's over, a lot of these companies are gonna pick right back up and go 2, 3 times more than what their value currently.
That's what history tells us. It always happens that way. You know what I'm saying?
You know what I mean?
I mean,
Good companies, man, they go down too, man. They just need once they get into a solid environment, boom, they just skyrocket.
yeah,
Because when you're a great company and the environment's right, you're gonna triple your money. That's how it always is.
triple your bag.
Yep.
Next one is Amazon. Amazon is up 36% on the year, which is good. But again, that was another one that was up all the way at $2,050.
And
Man.
I called that. I called it. I remember. I said it last year. I said Amazon in January is gonna be at 1,300, and I told you after that it's gonna be at 2 grand. You know what I mean? Amazon doing too much. It's they're out here trying to make people paper now. And Jeff Bezos ain't trying to make him paper. He's trying to make other people paper. You know what I mean? And that's how you really have to do it, man. You want to be wealthy, you want to be rich forever. Um, Find a way to make other people money. That's really the key, man.
I like that right there.
That's really the key. That's really the key.
Change
Change.
today.
Gotta make that change.
And you got to make it, man. And Jeff Bezos entering a realm where he's making other people money. Nobody's you can't tell me you ain't gonna be happy if you get a check from Amazon for 100K. You're gonna be, you know what I mean? You're gonna be a kid like in a candy store, man. You're gonna be happy as hell.
Yep.
And I think that's why that stock skyrocketed from $900 to $2,200. You know what I mean?
2050. They were, man, at one point
2050.
I had two stocks in my portfolio that had $1 trillion market cap, Amazon and Apple. And they both lost it, man. Lost it.
Of course, man. And they're gonna be back there.
They will.
Apple, I'm worried about, but Amazon, I ain't worried about. Like I said, man, you make other people money. You're gonna the self-driving cars. The fact that you only have to cough up 25K to get into the business, and you have an opportunity to make upwards to 250K, 300K, like, you know what I mean? That's money making, man.
All right, moving on. Our last one that we picked was Teladoc. They are up 46% on the year. That's another one that was up all the way at $89.05 in October. On October 1st, came down.
This one we probably would have never got rid of, even if the quarter exchange.
I would agree with you on that.
Yeah, you know what I mean. This you understand, you guys. Like when we say the stock is undervalued, it's undervalued.
Super undervalued.
And
it's a takeover target, man. This is a takeover
it's over target. And if they don't get taken over, man, expect them to dominate.
Exactly.
When I mean dominate.
Amazon
you know
type dominate.
Because this is like Zillow, but going the right way.
Yeah.
You know what I mean? And this is like Zillow, but going the right way. Here's why I say that, man. Because in the future, this is what the future looks like. And if you can't see it with Teladoc, I don't know what else to tell you. You probably shouldn't be trading stocks.
Yeah, you Ray Charles over there. Can't see
yeah,
that.
you got to be able to see this, man. They're literally doctors talking to patients while they're at home, determining if they need to go to the hospital. That's like, you understand, that's money savings.
Like you just said, Amazon finding a way to make people money. Teladoc, I mean, not the general public, but it's finding a way to make that niche of doctors money. You know, coming out of school,
Yeah.
you don't have to hurry up and go into debt buying all this
exactly, man.
This offices and stuff like that.
This is a great start. It's not like first of all, doctor's office is never gonna go nowhere. That's not gonna
ain't
happen.
Going away. I mean, if I got a broken leg, I gotta go. I can't call Teladoc like, hey, you know what I'm saying?
Yeah.
What's up?
Yeah, that's not gonna happen. You still gotta go in and get your physical. You still gotta go in and take a certain medication.
But
you still gotta go in and
you know what? I agree with you. Doctor's office never going away. But there's something here with Apple, Fitbit, Amazon, if they got into something like this, Google the watches and stuff. Whereas, I take my heart rate, it can update the app, tell the app go to
Yeah,
the
but
doctor,
that the reason why, man,
temperature.
I used to be I used to want to be a doctor, and those medical classes I took. I'll tell you one simple reason why I'm going. There's some stuff when a doctor hears your heart and they hears a murmur, you won't be able to tell if you have a murmur or not. The doctor has to check that out.
Right.
So when you go for that physical, you go for that, every couple months or every year physical, people's gonna need that still. I think Teladoc opens that door where they need to cut you a check. Where doctors who are not that big yet can start seeing patients through the app.
Immediately, like right day after graduation. You know what I'm saying?
You know what I mean? And the patients, like through the app, you can be like, okay, what are you symptoming? You know what I mean? And doctor can put it where they click this, if you feel this, click that. And a doctor can determine on the app what that person possibly has. If some of those signs sounds alarming, that doctor tells that person you need to go to the hospital or go see your general doctor.
Right, right.
I mean, that doctor can build up clients in 2-3 years where he can start his own office and say, "Hey, just come on in." Yep. You know what I mean?
Yep.
You get what I'm saying?
Yep.
That's Teladoc. Cut that check, bro.
Cut that check.
That's too good. That's too good, man.
I gotta make that change today.
Boy. Teladoc, go ahead and cut us that check.
Make that change.
Man, that would be a game changer definitely for young doctors, man. You understand the debt is so high. You're talking about $500,000, man. That like some doctors are in debt for like over $1 million. You don't understand, like that debt is
easy.
So it's like $250K to them is like chump change. Like the debt is so high, and it takes so long to pay it back. Unless you become like this phenomenal doctor, like 3 years out of residency, that's like not happening.
Dr. Conrad Murray.
Yeah. You watch that show too?
All right,
but
man. Yeah, that was it on the picks. Next year we're gonna have some better picks. We are going to do it quarterly, so we can be like, hey, blah blah, that's up, 2,000% right now. Just take it. You know what I'm saying? I don't know.
You know what I mean? Because there's some percentage you just need to just take, man.
Right.
I mean, definitely when you see something like, for instance, like Square, it's up 90%. You got it in at 30. Just take it.
Take it.
You know what I mean? Take it. You know what I mean? 80.
Pull out.
It gotta be it's time to pull out, man.
Pull out.
Sometimes you got like you caring about like 9-10 kids. You gotta let some of them go. Then you know what I mean? You gotta let some of them go, man. You gotta take that profit. Time to go.
Man, don't forget, no marathon money until the first week of January. We're gonna have those stock picks for you. You can follow me on Twitter at Camboni11, Instagram, anything you want, stock twits at Camboni11, same thing. Join our Facebook chat. Next year we're gonna do it, man. We're gonna.
Oh, if you haven't had an account on Robinhood yet,
oh yeah,
you better. Oh man, this is a dream.
Hold up though. I know they giving it 3%. I did some more research into it. This might be worth its own separate podcast because I don't know, man. They're not FDIC insured.
Yeah, that's the thing. They're not. But we got the thing about it is not that much information out on it yet. I definitely want to look more into it, but I'm definitely getting myself an account, man. Even if you were to put like $100 a month, you know what I mean? Like 3%, man.
That's good.
It's like, and the bigger they get, the higher that percentage is gonna get. And I know they were talking about that on CNBC. Like somebody said that hopefully they can get up 8 to 9%. That you understand? That's game changer.
I'm out of stocks at that point. I'm done.
Yeah, that's game changer type mentality. I you know what I mean? I wouldn't trade that much as I do now. I'll be more buying stocks. and just every profit I make, I'll be
Yeah,
put it in
exactly.
there.
Exactly.
If it ever gets to that 0.89%, um, that's just huge. It's huge. You know what I mean? So I heard they was talking about people who has bigger accounts. Say they got 100K, 200K, they might do it monthly for them instead of just like 3% a month, or you know what I mean. And for the people that has less than 100K, it might be 3% a year. Um,
Oh, we
huh?
come. I'm just, man, 3% a month. What's up, man? Like,
Oh
what's
man, I'm talking
good?
about because if you got think about when it does, it gets that money, man. You gotta make that change,
You
man.
gotta make
Like
that
Michael,
change.
you know what I mean? Because I'm telling you, is that if you do got 100K and they do the say 6% a month, that's huge, man. That's like that's like 10, 15 years down the road.
You're a
Like
millionaire.
you're a millionaire,
Nah,
man.
probably a little sooner than that. I'm not doing the math in my head right now, but if you're
Yeah,
getting 6% a month on 100K, that's roughly $6,000 a month. You
yeah.
know, 6,000
And you're
times
talking
12.
about this stuff was happening in the 60s, 70s, 80s, man, where that kind of percentage where some banks gave it monthly and some banks gave it yearly. Um, that's huge. That's huge. Most banks give you less than 1%, but they give you it to you monthly. It's not a yearly thing. Um, right now, the ones that have less than 1%, which is pretty much every bank,
Yeah, every bank
um,
except for the online ones like Ally.
yeah, they give it to you monthly, and I think even Ally gives it that one to you monthly. That's why I'm saying like they're saying that they're picking which one they rather go with, or they might just whoever has the high balances they just give them monthly, and people that have low balances give them yearly. Um, even if it was yearly, 6-7%, that's still a lot of money.
A lot of money.
Yeah,
So where can they follow you, Kenny?
man, Kenny Collin 23. You can definitely hit me up on the marathon money. Um, Definitely on the messages, man. We got to get more involved, get more people on the podcast. This year we had a lot of people on the
Yeah, a
podcast,
lot of
and
people, man.
a lot of people, a lot of faces. California, you know what I mean? Florida,
Talked about weed. You know what I'm saying?
yeah. You got, you know what I mean? We did a lot of things, pretty
That's
much
what we wanted to do,
2018.
though. We wanted to reach out to a little more people and expand our base. I think we did that, but we got a lot more to go, man.
Yeah, we do. We do. One thing I want to say, 2018 games are completely gone. Actually, there is no returning. 2018 is officially a lost. Um, it's funny because how quickly it can. 2018, we're literally almost seeing 27,000, and now we're at a
Well, we still in
total.
Kobe. We still at 24K.
Yeah, we barely making it though.
Yeah, we are. We are. That could be
My,
right. It could be 23 Monday, next trading day.
yeah, yeah.
Easy.
It's only, you know what I mean? It's the way the market's moving. 500 points, 700 points. That's easy. It's a lot of things just happened in 2 months, which took almost 2 years to do. So um, hopefully next year we can pick right up. I personally think, honestly, we got to get to 22,000 before things will turn around.
Ooh, that's rough.
Um,
That's rough.
I just think that honestly because we don't really have a base anymore. You know what I mean? We never really had a base when it was going up too.
Right, right.
So honestly, we kind of been in space for a little bit. We just been using our last little jet fuel to go up. So it's time to come down. But
All right,
have a
man.
Merry Christmas.
Yeah. Yeah, we'll be back next year for them good picks. So
Yeah, we're
check
gonna
us
have
out.
them ready. We'll have some new picks, some a little bit of the old.
Right, right.
You know what I mean? A little bit of the original OGs. But
All right, man. Till whatever week we back. Peace.
peace.